What is up, everybody? It is Brian Lochner on crypto. I am so excited to be bringing some content across the web. My objective is to bring relevant content that you can go out and take action on. I want to bring the knowledge component about what the cryptoverse is all about, what it means to invest in cryptocurrency, why it has value, how to make money in it, and more importantly, how to mitigate your risk, how to manage your risk in something that can be as volatile as this. And so what's really amazing is I thought I would kick things off in this very first video really trying to show you how you can get involved, right? A lot of times as investors, we want to invest money. We want to make the highest returns we possibly can. We also want to reduce our risk. Of course, that's the case. And I thought, what a great opportunity to show you how you can start to do that in cryptocurrency. And so the first thing I want to talk about is a simple concept. Let's say I have one Bitcoin, right? In order to make sure I'm making money, I have to hope that price goes up. And let's just say I buy one Bitcoin and it doubles in value. Okay, well, now I have twice as much value, but on that one Bitcoin. And all that's fine. That reduced my risk. The higher it goes in price, the lower my risk started to go because I'm getting farther and farther away from my break-even point. Another way to invest really anything, but specifically in crypto that I find is really fascinating, is if I bought one Bitcoin and instead of gaining interest on that, right? Like for example, if I bought, if I put money in a savings account and it earns interest, I now have more of that money, which reduces my risk because again, I'm farther away from my initial deposit. Well, in crypto, what if I bought one Bitcoin and I could earn interest on that? This is the world of decentralized finance, right? Or really what it looks like to have the financing component of the world inside of crypto. And this is exactly what they've done. Large groups have raised the capital to be able to launch decentralized platforms, which means instead of having a centralized bank be the ones that hold your money, gives you interest on your savings accounts, loans you money, we're now going to do it in a decentralized manner, meaning that we're going to leverage the technology to handle the transactions rather than having a centralized component being the one that makes all the decisions. Let me show you a really great example of this. Okay, so the thing I'm going to show on my screen right now is BlockFi. BlockFi is, again, a decentralized finance application and organization that allows you to put your Bitcoin up and like a savings account, and they will pay you interest on that asset. The key being this: if I put up one Bitcoin here, they will pay me back over 1 year. You see this 0.06 Bitcoin. So instead of putting up one Bitcoin at say $50,000 and I made 1% interest, I'm not getting 1% interest on my dollars. I'm getting 1% interest on my crypto, or in this case, I'm getting 0.06 crypto back. So at the beginning of the year, I put in one Bitcoin, regardless of the price. At the end of the year, I have 1.06 Bitcoin. What does this do? This does two things. One, the price of crypto might have gone up, which means my return on investment escalated as well. But two, I now have more of the original asset, 1.06, which also that 0.06 also went up in value, right? And so it's a way to double dip into kind of the crypto space, right? As you can imagine, you could go to this site yourself and you say, I'm going to put in one Bitcoin for 10 years. Well, on 10 years, I'll have turned what is it? Total interest, $40,000. It's what it's saying, but that is in today's numbers, right? The key to this whole thing is you can kind of sometimes choose, depending on the platform you use, you can put up Bitcoin, you can get paid back in US dollars, you could get paid back in Bitcoin, or there's even platforms like Celsius. Celsius is another large organization that allows you to earn crypto, borrow against your crypto, etc., and be able to grow your wealth, right? And so let's take a look at this first example here. If I put in $10,000 into Celsius, right, in Bitcoin, you can see they've got a lot of different coins. Some of you invest in Ripple or Stellar or Litecoin or something like that. A lot of you invested in projects because you heard somebody on TikTok, you heard somebody on YouTube, or you know somebody who made a lot of money, and so you thought, well, I want to make a lot of money. I'll just blindly put this money over to an investment I know nothing about. We're going to change that on this channel right away. But one of the things is, whatever you are invested in, it doesn't really matter for this purpose. We're going to say Bitcoin. And if I put in $10,000, my initial balance would be 0.19, so almost 0.2 of a Bitcoin. And if I want to earn rewards in Bitcoin, you can see they're going to pay me 3.51% in Bitcoin. in kind is what that's called, right? And so I'm making 3.5% interest on my Bitcoin. That's a pretty good return because now I have 3.5% more Bitcoin than I started with. And if Bitcoin also went up 3.5%, well, you get the picture, or maybe it doubled in price, right? Another way to look at it is specifically with something like Celsius is you could actually get the interest not in US dollars, not in Bitcoin, but in their native token, Celsius token. And what that means is you're willing to say, look, I would rather, this is a diversification strategy. I would rather put up my Bitcoin and instead of giving me more Bitcoin, give me 4.59% Celsius. And the reason I would do that is because I could simply go look at the chart here and it shows me that the average price or the price right now is $6.56 for each Celsius token. Well, had I done this last year sometime, where are we? We're in April. Okay, Celsius was at 7 cents. So I did make, what was it, 6% or something like that, right? No, 4%. I made 4.5% return on my investment in Celsius, but Celsius went from 7 cents up to $6. So what was my return on investment? Are you starting to see how you can double dip? I'm not just gaining interest, but that interest might also have exponential wealth. And so when you hear about people making a lot of money in crypto, they're not just doing the traditional buy and hold strategy. They're using a lot of different ways to do it. Maybe some people trade. We could talk about that. Maybe some people do this. You get the idea. But Celsius is simply another platform you could look into. Nexo is another one you can earn crypto, just like I showed you. You can also borrow against it. Another fascinating concept I think maybe we could talk about is let's just say I wanted to really look at the USD coin, which is a stable coin. Now, just for the ease of conversation right now, a stable coin means that the investment in the coin is tied to something, a stable asset, in this case, the US dollar. So the USDC coin will always be worth about what? About $1. Okay, it's not going to go up in value to $10 or $100 or something like that. That's not what it's pegged to. It's pegged to the US dollar. And so because of that, what could I do? Well, I could say, all right, I'm going to put in 10,000 US dollars and I'm going to buy USDC on that coin with that money. So now I hold not 10,000 US dollars, but now 10,000 USDC dollars or stablecoin dollars. It'll always be worth about a dollar. But what you can see is over a 1-year time frame, look what they're paying you, right? They're paying you 8.6%, right? So if you have a savings account, just your average savings account, and you're like, no, that money needs to stay safe because I need to know that money's going to be easily available and that it didn't fluctuate in price up or down. Maybe a consideration is to say, look, I got 50 grand in the bank. I'm going to take 10,000 or 20,000. I'm going to put it in a stable coin that earns me 8% interest because let's be honest, at Wells Fargo, you are not getting 8% or 4%. Typically, a bank, their return on investment starts with a 0 and then a dot, and then typically another 0, and sometimes even another 0. So if you're wanting to say, I need to keep my money safe or extremely low risk on the scale there, a great way to do this is to take some of your money, put it into an asset, a cryptocurrency asset that is pegged to the US dollar, backed by one of these larger companies like BlockFi or Celsius or something like that, and simply earn more interest. Because just like a bank, you can deposit when you want, you can withdraw it when you want. It's not even like a CD. You don't have to commit your money for 6 months. That's not what these platforms are for. Now, the other thing that I want to talk about, because you can go look at all these, you can figure out which one's best for you. They all will tell you, oh, you can make more interest here, more interest here. You make even more interest if you use our coin, the Celsius coin, or whatever it is. Play around with it, see what you think. Let me know what you think too. I'd love to hear if you went out and you did this. I think this is great. I've opened my account here just recently, so I'm very excited to kind of share with you a little bit more as we go on to help you better understand how this can be of benefit to you without increasing your risk level, right? Instead of traditional banking, this is going to be the way to get into banking, decentralized versus centralized, right? And so the only other thing that I thought I'd mention is this right here. This is kind of a caution. A lot of you are going to hear about how you can borrow against your crypto. This is going to change the world because a lot of times right now, borrowing money from a bank requires an application and collateral, and they need to decide that on their terms that you're worth lending money to. But in the crypto space, your collateral, your crypto, is what's going to back your borrow. So I could put up one Bitcoin, which happens to be $50,000 right now. And I could borrow 50% of that money. As you see, I could borrow it as low as 1% APR, right? You can kind of walk through all their terms and stuff like that, but I can simply say, I want to borrow $20,000 for 6 months, for 12 months, for 24 months, whatever it is. It will tell me how much collateral I need of the Bitcoin or whatever if I want to borrow it at this level. Let me warn you, pay attention right now. Do not be the one, right? Do not be the one who says, I'll go put up my one Bitcoin. I'll borrow 50% of that value. So Bitcoin's around 50 grand. I put up that Bitcoin. I could borrow $25,000 USD, like actual cash to have right now without losing any sort of value on that crypto, right? Here's the problem. A lot of people are putting up one Bitcoin, that's $50,000. They're pulling out $25,000 in cash and they're buying more Bitcoin. It sounds so smart, right? 2 words you got to remember: risk management. Okay. If the price of Bitcoin was to go up or down, you can get potentially liquidated. That's one of the things you're agreeing to. And so I would warn you against borrowing against your crypto to buy more crypto. It sounds like a great idea. And if you're in a financial position to be able to take that level of risk, hey, you make your own decision. Nothing I say is going to be considered financial advice. I simply want to share my opinions on how this goes, because again, my objective of this channel is to show you how to, 1, understand the industry that you're investing in, 2, how to build your wealth, and 3, how to really mitigate your risk as we move forward. And so I hope that was valuable to you today. I'd really encourage you to go check out these sites. I could have a link or something in the description, but look, go Google it yourself. You don't need to pay me a referral fee or anything like that. Go check out Nexo, Celsius, BlockFi is one of the biggest ones. There's several others out there, but it is a decentralized platform that allows you to invest your money or your crypto and get a higher rate of return without increasing your risk. It's always available to you. The thing about crypto is this: the moment you give somebody else your crypto, your risk starts to go up. And so we'll talk about that moving forward. That'll go into kind of some of the risk management conversations. But with these platforms, they're very large. They have a great reputation. They have tons of money behind them. And a lot of them are insured as well. And so that's going to help to mitigate your risk as well. So I hope that's beneficial. I'm excited about this. Make sure you're liking this video if it was valuable to you, and subscribe to the channel as we start to put out more. And we will be bringing the latest and greatest content across the web to help you understand, how do I understand this crypto space? What does this mean for me moving forward? How do I invest in it and take advantage of the amazing opportunity that's been presented to me just because I'm alive during these times? And then thirdly, how do I mitigate my risk so that I can keep my wealth? There's no point in making a lot of money if you're going to lose it the next day, right? So thanks for sticking around, checking out the whole video. We'll see you guys on the other side.